Hello guys, glad to have you on board again. Today we'll do a quick intraday review and trying to highlight a potential area for an intraday trade. Once again, we tried avoid polluting our brains with all the swing scenarios, even though, and I stand for this, I think it's still necessary to account this in your decision making process. I think we're emerging out of a bearish signal to come in the forthcoming days, weeks. It's just a matter of time and volatility to return back to the market. So we're kind of waiting for something to just wake up the dead body we're trading on a day-to-day basis. So if you want to do intraday bullish trades, I think the risk is this. You know, at some point something ugly may be showing up. You don't know when, you don't know why. So if you just do intraday trade in a bull side, the only thing you'll do is first you divide your leverage by 2, just to be aware that there might be some liquidity conditions problems or anything like that that could happen, and as it is possible, you just lower the leverage. Buying is still the most favorable thing at the moment, because obviously anytime we try to do anything on the opposite side, it doesn't work well. So yesterday has been a good opportunity on the SPX. We did reach out first profit taking. We did even got below the actual profit taking area, so it was suggesting the bears were in control, but obviously not until the candle closed, because that's not possible to be bearish, even though what we've printed yesterday is not bullish at all. We've been breaking previous day's lows. We hold a negative candle close, but still a lower shadow. So the bulls are obviously happy because they think it's going to go higher because of it. So the problem is we're now reaching out to another area of interest. That's something I've been highlighting for a few days. This is why I still recommend you guys to have a look at the daily cash index, and remember the big gap we had right here on the on the DAX, German DAX. So we're now filling this gap as we speak. All right, the gap is now filled. So this is why I've been highlighting this potential thing, because this is a technical area, and obviously the market makers wants to fill those gaps for many reasons. I don't have the time to get into details, but they want to fill those gaps. So in here we were close to, so why the hell would they have let us go down? So they could have been wrong-footed in here, but what they decided is just no way, we are not going to break that support until we get there. So now we're here, and I made a full review of all the cash index. There's nothing else attracting us to the upside right now but hope or a deal. So the only thing that can push us higher right now in a daily kind of structure of price structures is nothing but hope. So back then I could somehow understand the hope, saying now it's pretty fucking far. I mean, when we were there saying we still have 3% to get there, filling this gap was making nonsense. When we were there, man, it's just 2%. Why not getting there? Once again, getting in here makes absolutely no fucking sense. Germany is about to have its second negative quarter in a row, which means Germany is about to recess. The first quarter was barely contracting, so it wasn't actually, but it's close to. It's just, what's funny right now is that everybody figure out the numbers without even giving a sense of what they mean, which means we do have very bad numbers, but no way we're expecting them to be better later. So let's fuck up the bare numbers and we'll deal with the problems later. So that's exactly the mood we're currently into. You know about that problem. You know about the volumes going down, all the gaps we've left behind. That means we're probably not as bullish as people may think it is. We might most likely be at the end of a very nice 4 months bull run. But the problem is we're still lower highs. And that's the big problem, because definitely Wall Street doesn't like that. They doesn't at all. All right, let's go back. All right. So we're trading fibs retracement. So look at the broad stocks 600. All right, it's important for you to have a look at this one, just to have a broad picture of what happens in the Euro session. We're here below resistance, below a Fibonacci retracement, which means in a broad Euro perspective, there's no bear market. The growth is nearly zero, which means we just have to deteriorate a little bit more, and we're showing up recession trades out of expectation. So we keep on slashing growth expectation week after week. But still, 76% retracement. So what is this? Is this a dead cat bounce? Because it could be, but it doesn't look like one. Normally a dead cat bounce is two sets of waves clearly visible. So in here something ugly happened right in between, which is the central banks. They magically said, we're going to have it under control. Don't worry, everything's going to be fine. So I still tend to believe, despite that, and I would like to see this on price, but this is the first in history that central banks have a full impact on prices. And that's dangerous, because now we're all in with central banks, and they better have to do some good job, because if they just fuck up, then it's going to be even worse. Alright, so the question is, do you want to buy that kind of market? To me, the answer is clearly absolutely no. Do you want to sell that? Yes, but speculatively. I've missed my first bullets, which means I cannot even imagine selling again right now in a swing perspective without having clear signs from prices. I need confirmations. Does that gonna stop me from intraday selling and try to hold a half of my position for swing baskets? Absolutely not. That's what I'm going to do. I'm going to do intraday trades when opportunities to be bearish are viable, which is going to be rare, but still possible, like today is one. The German index filling this gap this morning is definitely an intraday trade opportunity. All right. So now what we're going to do is I'm going to switch intraday, all right, on the German DAX, obviously. And we're going to try figuring out what the hell happens. How are we going to which way are we going to reach out to this gap? And as you can see, we're doing it as usual, full momentum, full gas, with an empty tank. But still, the thing is that we need to print emotions. That's exactly what we need. It has to be bullish looking. It had to be bold, it had to be fast, because when it is, we can use some momentum to keep going higher. That's exactly like that. I mean, look at how this market is. Normally we see that kind of stuff in a reverse market. Normally that's where you see those kind of stuff, when the market is brutally reversing. Normally we go faster to the downside than we do to the upside. But the thing is that right now, the bullish bias is so strong that people just buy without questioning. All right, normally this is the kind of market we have when we sell. All right, this is a sell-off. All right, this is a sell-off like kind of market. So what did we have? We had a buy-off. So it's exactly as stupid as it is. Normally you don't see that kind of pricing to the upside, but we did. So it's dangerous, but you cannot trade just like that. I'll suggest this target is a little bit too dangerous, trading without signal and most likely with such kind of momentum. So I would say those guys, I'm sorry, that's not what I meant. The guys trading earlier today, they probably think the momentum is strong. So as they do, I suggest you don't go too aggressive. You know that each box in here lasts for 1 hour. No, it lasts for 4 hours. No, it's 2 hours boxes. All right, so 2 hours a box. So at 11 a.m. we're gonna have another box. So in 1 hour from now we're gonna have another box filling itself. All right. So in here the next box is closed. If we get to close in the resistant context, that's good. All right, that means we can probably try something out. If we close below, all right, if we close in there, we're probably going to have to push for a divergence. So what they're going to do is probably, all right, this, pushing for divergence, and then I think in the midday break session is probably where we're going to have this excessive market pricing, probably a bearish signal. So I suspect that we've got the target. Normally it's a selling signal for aggressive trader. What I mean is that being aggressive lately hasn't been producing any viable effect, because all we've been doing and what we've been facing is irrational bullish pressure with low volumes. But still, prices are moving up. And remember that price is what brings you gains or losses. Therefore, being aggressively bearish didn't really work well. So you need to adapt. Just being bearish, but less aggressive. Be more, be smoother with your stop losses, put them further away, making sure that even if it goes unexpectedly bullish, you can handle some money management to the upside. So I would suggest in here, even if This is tradable. I won't jump on this just like that. I'll just wait for just a little bit higher prices, eventually a divergence. But still, if you want to sell, do it. You just put a large stop loss and normally you should be fine. All right? So I think the German DAX is the selling active today. The thing is that either you wait for a pricing signal, anything bearish in here close to this target will be enough to me. But just trading like that after a bullish open gap momentum, I don't want to just sell this like that. I think I'm going to wait for just a bit higher prices or wait for a clean validated reversal and I'll sell on swing trades in here. Remember that I can't swing trade on the euro area. And obviously, as I would do this afternoon, I'm probably going to be selling the US as well. For the same reasons, if we do build a market top in here and reverse, I'll definitely take another intraday trade, putting my stop losses out of today's highs. What I want, obviously, is us to get back to yesterday's prices, kind of a momentum outburst out of futures contracts, but still the cash, I want it open in here at 29.10. Just like yesterday's price, I want it to open near those prices and sell. And that will be the worst case scenario, because if we have that, remember what yesterday's session looked like in a cash market. All right, we tried but failed. This is what we call the hammer pattern on the daily charts, breaking the lows, maintaining a bearish close under resistance. So today is going to be important. If today is a bearish session, then this is a reversal structure. And remember that we up-gapped to get there, which means if today's session just looked like that, I'm going to show you something. All right. So if today's session just looks like that, which is very likely going to happen, but I don't nearly think we're going to break yesterday's low. We're just going to probably die in between today, die in there. But if we do have that, and if yesterday, for God knows what reason, China is selling, which I think is very likely going to happen, well, we'll have it here as an Iceland reversal structure plus a hammer reversal in here, which is absolutely bad sign for bulls. This is definitely the kind of selling signal that will be held for the weekly candle close, which means Friday will be absolutely carnage, and we could eventually even bearish engulfing the previous week. All right. So that's something to bear in mind for now. The bulls think this is great and this is easy and this is a one battle. Let me tell you, it isn't. So far, we still haven't broke the previous week's high. And if we made a bearish engulfing on Friday, then this will be just a strong reversal for the bulls. Because remember what we have. Even if this managed to close at the highs, this will be just an evening star pattern. All right. And facing this, that will be just it. That will be just it, the end for the bulls. A bearish engulfing structure on the weekly charts, and this is over. And we'll have the lower highs, and this will be settled. So I would like this market to return back to those prices today by the midday session. If we don't, then the bulls win another game, and they're so strong, and they're probably going to push us even higher today. All right, so the battle is running. We're up here today for the German DAX because we had a gap, and probably this is going to be a selling signal in the nearby area. But still, wait for signals. You don't trade just because of what you think. You trade because of what you think when it corroborates with what you see on the charts. I'm definitely bearish. I might have a bearish bias, actually. But anyway, you need to have a plan. If you trade without knowing if you need to buy or sell, then at least refer to the indicators. So if you don't know what to goddamn do, what do you do into selling context? Do you buy? No, you don't. So only thing you can do is selling, because that's all that means something in here. Selling is the only thing you can do. That's how speculative works. You're not here to know what's going to happen, just what are the odds. In here, we're into areas which normally behave with bearish reactions. So if you don't know what to do, just sell, or at least try to sell. That means you favor selling signal. These are the ones that have the low risk profiles. But the problem is, we do have a problem with the price structure. The market doesn't care about bearish. I rarely seen anything like that in my entire history. So it is like, out of how many goddamn weeks? Out of 16 weeks, we just had 2 bearish weeks. That's incredible, all right? That's really incredible. Most likely when we were nearly in recession in here, when we triggered bearish signals, I mean, yes, that's really a big problem in here. But any fucking way. We'll see. Wait for actual price activity signals. Otherwise, selling remains speculative, and the guys doesn't absolutely want you to sell. All right? That's probably it for today. I have no more to say, so I'm waiting for a German index signal on an intraday basis, and when I'll have that, then I hope to take another selling signal later today on the SPX. Intraday for both of them, which means I'm going to quickly secure the trade, but both of them I'm going to keep half the leverage for swing purposes. But for now, it remains intraday trade because it is not possible to do any more than that. See you tomorrow.